for your time. Good speaking with you, and all the best for your plans going forward. The market is absolutely flat now, just 12 points lower. So it's a very strong, decent pullback that we have on our hands at 17,900 now. Now, as promised, our special segment, Quarter Se Quarter Tak, we look at sectoral expectations every day, different sectors. Sonia has walked across to the big wall, and she's going to take us through the expectation from the auto sector for the quarter, for the third quarter. Sonia, over to you.
Well, let's talk about what to expect this quarter from the auto sector, right? The demand environment is stable across most segments post the festive season. Revenue growth is expected to slow down in a couple of pockets like the two-wheeler sector, while the medium and heavy commercial vehicle sector growth is expected to be strong. Now, Maruti and M&M are expected to report a revenue growth of anywhere between 20 to 40%, as you can see on this screen, while commercial vehicle players like Ashok Leyland are expected to report a very strong 61% growth in this quarter gone by on a year-on-year basis. The laggards, as we all know, are two-wheeler makers like Hero and Bajaj Auto that have been hit due to no recovery in the rural demand and a slowdown in the export market. So look at that. Hero, barely a 1% growth in the revenues, while Bajaj could see a fall of 3%. Now, the big question is, as pent-up demand normalizes, will growth rates slow down further? Nomura put out a report where they expect the passenger vehicle industry growth to slow down to 6% in FY24 from 23% in FY23. Remember, regulatory costs are also rising because of the BS6 Phase 3 norms that kick in April 2023 onwards, and 6 airbags will be compulsory from October of 2023. So the question is, will higher regulatory costs hit demand further? Another ponderable is, will discounts continue to increase across segments like commercial vehicles, or was it just a year-end phenomenon? And finally, will there be any respite in export demand for two-wheeler players? Export demand, remember, continues to get impacted by the availability and devaluation of forex in the end markets. Let's take a look at the volume table below. Companies like Ashok Leyland and M&M are expected to see the highest volume growth year on year. And, if you move down, you take a look at some of the other players like Hero MotoCorp that could see a fall in volumes. Now, that's on the top line front. Let's move to margins. Margins is the positive picture. It will improve for the second quarter in a row, led by lower commodity costs. The commodity cost index itself is down 250 to 300 basis points compared with June 2022 levels. Lower commodity costs along with price hikes of 1 to 2% should benefit margins in both Q3 and Q4. Take a look at the table that comes up for you in a bit. Ashok Leyland and Tata Motors along with M&M will see the biggest margin recovery this time around. And we, of course, await commentary from managements with respect to whether there is scope to improve margins further, given lower raw material costs and operating leverage. And finally, we will seek data to conclude whether we are at the end of the auto down cycle, as demand is largely stable post the festive season and margins are expected to improve. So let's head across to Basudeb Banerjee, who is the analyst at ICICI Securities. He joins us now. Basu, thanks a lot for joining in. As I was, just speaking about it, margins are expected to recover and volumes barring two-wheelers are expected to be stable post the festive season. Your thoughts on the three key expectations from the auto sector and the stocks that you like?
Yeah, so few things which you pointed out rightly, like the commodity basket is down to 50 basis points, which should help the margin structure. But firstly, I won't look at the growth from a year-on-year perspective, because the segments which have grown on a year-on-year basis, the stock prices have also run up subsequently. It is all about the sequential volume movement and margin outlook, which will drive the price and the forward business outlook. So from that angle, if you look at the two-wheelers where volumes were down mid-teens on a sequential basis, that will balance out the benefit of raw mat decline. So from that aspect, this quarter, we expect two-wheelers to report a weak set of numbers. And as you rightly mentioned, if you look at the stock prices of two-wheelers also, they have been laggards. So you can say that the weak results are already built into the price, and that's why stocks have corrected or gone nowhere. Correspondingly, from a result perspective, the number which you showed on the screen for Tata Motors India business margin, which is 10.6%, if that comes from 6% last quarter, it will be a big positive surprise. We don't expect such a major jump on a sequential basis. 6% can become 8.5%, 10% plus doable in Q4. where seasonally it's the strongest quarter in terms of volume. So yes, we are most positive on the commercial vehicle space, where price hike retention ratio is at a 70 to 80% level compared to 20-30% in the previous upcycle. So that means if you are hiking prices by 1,000 rupees, your effective price hike is almost 700-800 rupees. So that is quite a positive signal, and we are already halfway through the CV upcycle. So it's now the turn of margin improvement for the CV players. Volume growth has been stupendously strong. So yeah, from this quarter onwards, margin improvement for CV players will be the key driver from a stock price perspective. For passenger cars, as you rightly pointed out, 20% plus growth anyways is not sustainable. And the good part is, if you look at 20% growth was on the background of 12 to 15% blended price hikes to pass on the commodity inflation. Next year, the BS6 phase 2 or the airbags price hikes won't be of that extent. So despite lower price hikes, fuel costs being subdued, still because of base effect and consolidation, industry growth should normalize down. But volume growth should not be the right parameter. One should look at the value mix for the industry also.
So within the two-wheeler space, I do know that, of course, it's expected to be a weak set this time, but you like TVS Motor. There's also that added benefit for TVS Motor. It's doing exceptionally well in the EV space, although it's a very small portion of the business. But do you think this electrification theme is something that could play out in this year? Will these companies like TVS, maybe even Tata Motors, Maruti, of course, is some time away, M&M, will they see an outperformance because of the electrification theme?
So frankly, outperformance because of EV theme, I don't think is going to happen immediately. It is more to do with the losses in the EV space narrowing down with volume scaling up. So for example, TVS has already reached almost 12,000 units a month. So the more they scale up in the EV space, their EBITDA per unit losses will shrink further and help overall margin to move up. So just EV, first mover advantage in EV helping them to outperform at least in next 12 months, I don't think that's going to happen. But for this quarter results, even TVS, I don't think is going to report any great set of numbers. But we like TVS from a long-term perspective.
You also like Ashok Leyland, and that has been, the numbers are expected to be good. It's been an outperformer. How much more upside do you see here, and what could be the triggers this year or this quarter?
We're building in fiscal 25 as the peak of the CV cycle. And as you know, Leyland trades at somewhere around 12-13 times EV EBITDA at the peak of the cycle. So somewhere around further 30-40% upside from today's level, I'll say that it will peak out from this business cycle perspective. So next trigger will be margin moving up from this 6-7% to upcycle margin of 10%. And that is the next big move to look for in the stock.
Okay, happy to chat with you today. Thanks a lot, Basu, for joining in. Have a great day. That's the word coming in on the auto sector. The market, by the way, is so very quiet. Is it the lull before the storm? You never know. But for now, after yesterday's big fall, the market at least has not seen any accelerated pressure, and neither has it seen any revival, just consolidating around the 17,900 mark. In fact, we'll pose that question to our technical expert, Mitesh Thakkar will be joining in for a technical trade in just a bit.